The fastest way to increase your income is not by investing. It is not by trying to squeeze an extra 2% yield out of a market index fund, and it is definitely not by picking high-dividend retail ETFs. That is the portfolio lie that keeps thousands of smart, hard-working professionals completely trapped in their careers. You think you are playing it safe, slowly building a defensive net worth while enduring 60-hour workweeks and endless corporate burnout. You are wrong. True financial acceleration is not built on market returns when your capital base is small, it is built on protecting and scaling your active career leverage. Today, we are going to tear open the mathematical reality check that the financial industry refuses to show you. We are going to look at why your investment portfolio is lying to you, what the real return on skill looks like, and how elite professionals shift from buying microscopic market shares to building massive personal leverage. This is a cold, clinical reality check for your career. Pay attention. Let us look at the fundamental math that most retail investors ignore because it makes their progress look invisible. Imagine you have $10,000 in savings. If you put that money into a great index fund and achieve a highly respectable 10% annual return, you make exactly $1,000 in a year. That is less than $3 a day. It does not change your life. It does not buy you freedom. It does not even cover your grocery bill. Yet, professionals spend hundreds of hours analyzing charts, tracking tickers, and worrying about market drawdowns, all to optimize a return that is a drop in the ocean. This is the portfolio illusion. You are focusing all your cognitive energy on managing a tiny base of capital. The math is airtight, but the base is too small for the math to matter. The top 1% of earners do not build their first million by passive investing. They understand that in the early and middle stages of wealth accumulation, over 95% of your wealth growth comes entirely from one factor, your active income. The real problem is that your salary has become a golden cage. When you earn a decent living, you fall into the trap of thinking that working harder within the same corporate structure will eventually buy your freedom. It won't. Your time is finite, your energy is a depreciating asset, and your corporate salary has a strict institutional ceiling. If you stay within the standard employee framework, you are trading your highest ROI asset, your mind, for a fixed, linear payout. To break out of this cage, you must stop investing in other companies through retail stock markets and start investing in your own career leverage. Think about the return on investment. If you spend $5,000 on a high-end certification, a specialized masterclass, or mentoring to acquire a rare, high-income skill stack, you can easily negotiate a 30% raise on an $80,000 salary. That is a $24,000 return on a $5,000 investment in year one alone. That is a 480% ROI. Show me a retail ETF that gives you a 400% guaranteed return in 12 months. It does not exist. Your skills matter more than your portfolio because your skills control the size of your base. Building career leverage requires transitioning through a highly specific structural framework. You cannot scale by simply being a good soldier who works longer hours. That is a linear strategy that leads straight to burnout. You must build three distinct levers: specialized capability, social trust, and structural scale. First, you build a rare skill stack. You combine two or more high-value disciplines that rarely intersect. For example, a great engineer is valuable, but an engineer who deeply understands thermal simulation software and can communicate complex material reliability to executive stakeholders is irreplaceable. You stop competing on volume and start competing on uniqueness. Second, you build social trust. This means documenting your expertise and making your performance visible to the market. When your track record speaks for itself, you no longer have to chase opportunities, opportunities gravitate toward you. Third, you build structural scale. You stop selling your hours and start selling your systems, your code, or your intellectual property. This is the exact moment where your professional income decouples from your time. When you successfully build this career leverage, the math of your life shifts from linear to exponential. The same effort that used to bring you a 5% annual raise suddenly allows you to command massive premiums, land elite consulting roles, or transition into high equity positions. Your surplus capital multiplies. Now, think about how this changes your investing game. When your career leverage allows you to generate a surplus of $100,000 a year instead of $10,000, the 10% market return suddenly becomes a real wealth engine. A 10% return on a large capital base is $10,000 a year, then $50,000, then $100,000. The framework of the market hasn't changed, but because you focused on your career leverage first, you multiplied the base. You did not let a microscopic retail portfolio dictate the ceiling of your financial potential. You became the engine. Most professionals will watch this and do nothing. They will go back to their corporate cubicles, complain about their salaries, and continue reading financial blogs hoping a magic dividend stock will save them from their jobs. They will stay trapped in the golden cage because they are terrified of investing in themselves. But for the few of you who look at the numbers and realize that you are your own highest yielding asset, the roadmap is completely clear. Stop looking at the stock market to build your primary wealth. Stop letting your portfolio lie to you. Turn your focus inward, stack your rare skills, build massive career leverage, and force the market to pay you what you are truly worth. The math of wealth creation is waiting for you to execute.